What's up, kids? Let's do a quick live. What you guys cooking up over there? You got any trading questions? What up, AJ? How can we help you? You got any questions? Hopefully you're all making your millions from trading. Take your trades, stash your money, keep at it. Cooking up some profits, right? Keep at it, AJ. You don't need that dirty job. Texas all day, man. Where you been? We need a recap session, or do we? Do you think crypto bull market started? Okay, I say yes. What are you gonna go buy? I say no. What are you gonna not buy? Where's your confidence, man? Who the hell knows if it started? When is your course dropping? Say a couple weeks. Grateful Red 77, what's up, buddy? I want you to join in this, man. How can we get you on this? Can you tell us how to do day trading in just 2 or 3 pairs? I don't know what this day trading is. What is that? 50 pip, 20 pip stuff? I mean, you just click by accident, you guys get 20 pips. By accident. You click the mouse, by accident, you get 20 pips. So, what you mean day trading? Break down how you made 1,000 to 50,000. I was gonna release the MyFX book on that one, but just trade and refine the skills. That's good, man. Keep at it. We might need a recap. Maybe go through some of those trades. 1K to 50K flip. What was the leverage? A lot. Don Sammy, what's up, buddy? But I'll give some tips on that 1K to 50K. You start off by closing some profits. Like I said, step 1, you want your principal back. Let's say it's 1,000. You want that $1,000 back. Okay? Forget about making millions right now. You want your principal back. So that's the first step. Talking about the 1K to 50. So you need that 1,000 back. But once you close some profits, for example, on that account, it was 1K, and then it went to 2K, 3K. And once it hit 3K, I was up 2K. So that 2K was risked on a trade. So keep it simple. You just risk the profits, but not on 20 pairs. On 1 pair, you're looking to squeeze 1 move, 1 wave, 1 A to B movement. Okay, so the price is going from this level to that level. You're just squeezing on the way as the banks push it from A to B. Okay, so obviously you go break even on your initial position, then you add another one. We never increase the risk. Risk is constant. You may even lower it, but you never raise it. Okay, and then you add your next position, and maybe it ticks up a little more. So you go break even on that, and you add another. You know, hopefully it keeps going up, and you get a nice trade. But the key is just go and break even on the initials before you start doing additionals. So risk-free on initial before any additional. All right, but it's not about that, guys. It's about It's about having a certain process that you just rinse and repeat. You don't think about it. You don't hesitate. You don't doubt. You have a system that you just implement. Right? Thinking is a mistake. If you're thinking of what should I do, that's a trading error. What are you thinking about? You should already know if you're going to buy or sell, or how big your position is, or what your risk is. You should already know. There's nothing to think about. It's just execution in the end. I don't understand how you managed to do that many lots with 2.8K. Well, you're only adding more when you're making some profits, when you're getting that free margin. All right, but that's a whole nother story. Forget that. Can anybody answer me? What's your question? How to know if a zone is strong or weak? Look at the origin. How much did it drop? Did it drop a bunch? Zone is strong. Did it not drop a bunch? Zone is weak. There's your answer. What up, Roy? But sometimes it doesn't work. What doesn't work? Okay, so it didn't work. You go on to the next one. You gonna cry about it? It didn't work? Well, listen, man, take the course and then you'll see how I mean by all this. Okay, it didn't work. It's not about, if you're looking for something that's always gonna work, you're in the wrong spot. We're looking for something that's gonna work most of the time. That's all that matters. What do you think? This business has no expenses? No. 1K to 55 was not one move. Or that's actually possible to do it in one move, but no. But I got it running with one move, which is just one trade. Which is just a 50 pip move, which is pretty much nothing. You get that by accident. Never force a trade. Absolutely. What are we, desperate? We're trying to force it? What are we in a rush for? You think you're gonna make your money faster if you force a trade? Do you think the FX market will be here in 50 years? Man, we got some kind of brains on this one. That's why I stopped doing this live, because of these silly, crazy questions like this. Somebody's asking me what's going to happen in 50 years. I don't remember what I ate yesterday, man. I don't know what's going to happen tomorrow. I'm going to ignore you. Of course, like I said, 2 weeks with the most. The thing about this course is, how do I get you guys to understand the game and make money? Now, this is not easy, especially for an Instagram kid who just wants to read something real quick and, get rich quick. That shit is strong. Very strong, that get rich quick desire. That's powerful stuff. That makes people do a lot of stupid shit. Right? But I'm trying to put it in a way where you guys just understand the process and you guys can get a little now. The first part of this game is analysis, which is all you kids love. You guys love analyzing. And that's why most of you get this analysis paralysis. You guys analyze so much, you need 1 million confirmations, you end up doing nothing. Okay, but that's the first part of this whole game, is analysis. Now, what the hell is analysis? It's just finding a good deal. You're buying the euro or you're selling this. It's just like you're buying a house or a car or anything, or a shirt. You're looking for good deals. Okay, obviously good deals means something cheap to buy or something expensive to sell. That's just a good deal. But that's the whole point of analysis. Just to find a good deal. Now, you got to do a lot of stuff to find it, but that's just analysis. It's finding it. Now, you found it. Congratulations. Okay, you move on to the second step, which is execution. And I say flawless execution, which means taking what you took from the analysis which is 3 numbers, entry, target, stop, and plugging it into a platform or a system or some kind of your broker or whatever the hell you use. Okay, but the whole point of analysis is to get those 3 numbers, your entry, target, stop. All that analysis was just to get that. Now, what the hell do you do with these 3 numbers? Well, you execute with them. Okay, you calculate your position size, whatever it is. However it is you do it, whether you use risk models or you use a little app or you use, doesn't matter. But analysis should be should be all your work. Execution takes seconds. But for you guys, it's the opposite. You guys analyze real quick, you jump into a trade, and you're sitting there executing all day. You're moving your targets, you're moving your stop, you're moving this, you're doing that. You're managing the whole thing. You find a good deal and you execute on it. So that's the first part, is analysis. The second part is executing. Analysis is finding the deal. Execution, flawlessly, obviously. Everybody executes. A monkey executes, but not many can execute flawlessly. Okay, but after you found the deal, you execute on that deal, which means entering the deal. So analysis is finding the deal, and execution, flawless execution, is entering that deal. Now you found the deal and you entered the deal. Congratulations, you're not done. All right, that shit is easy. Now is the third part, which is the hard part, which is psychology, which is letting the deal play out, which is not messing with it and not micromanaging it. And that gets into a whole nother part, psychology. But these are the 3 things: analysis, finding the deal; execution, flawless execution, which is entering the deal; and then you got the psychology, which is letting that whole deal play out. Let it either hit the target or the stop. Either way, who cares? Right? And that's the whole game. And you know, that's what I'm trying to do in this course, simplify it where even an Instagram kid would understand. All right, let's see what set dollar amount of risk or percent amount of risk. Well, it depends. I don't do percent. I do dollar amounts. I got 1,000 per trade, or 100 per trade, or $10 per trade. I don't do that percentages. I like fixed lot sizes. How percent are you looking at fundamentals, man? I don't care about fundamentals. I look at the chart and it tells me the fundamentals. Sending love back at you, Mr. Italy. Little Italy, is that in Italy, or Illinois, Italy? Do you ever look at COT data and bond yields to get? I used to, not anymore. All that shit was wasting time. Price is king. Been in the game 2 years, picking up here and there. Great. 2 years, it should be coming together. What's the number one thing you learned from Mark Douglas? Predefine your risk, which is very few people do, which is actually just calculate your risk, and accept your risk, which pretty much nobody does. Everybody, well, I don't want to say everybody, most people calculate their risk, but very few people accept it, which is a whole nother step in terms of risk management, which I'll cover in this course. But very few people accept the risk, which is a whole nother step. Accepting it means you're absolutely fine if you lost it, which very few people do. You know, they open their trades, but they hope it doesn't hit their stop. Which is why when it hits their stop, they get bothered, because they never accepted the risk. They skip that step. But that's what Mark Douglas says. What else you got? We're going to keep this one short. You use order blocks and fib levels for entries? No, I don't even know what an order block is. I probably gotta assume you don't know either. All right, but you probably heard someone say it, and it sounds cool. Order block. So we're throwing it around. I hope you know what that means. But I use buy zones and sell zones. Wherever the banks buy and sell, that's where you'll find me. It could be a fib, it could not. It doesn't matter. The point is, as long as a bank, as long as these BFIs are there, I'm there. Trade with apathy, absolutely. Will your course talk about price range volume? Well, I do have a section on volume, and it's actually called Understanding Volume Properly, and how to use it, and how volume is related with consolidation. Right, so yeah, I do got a section on that. Shout out to the BFIs. Yeah, they don't need no shout outs, man. They're taken care of. If you got John Davis, man, what can I can't thank you more, man, with these comments, because you're hitting the nail on the head. If you guys spend as much time on his profile actually reading and digesting his posts as staring at FX pages with Lambos, almost all these questions would be answered. John, you're gonna get a special gift from me for that one. I'm gonna ship it to you. Well, COT and yields, maybe it's not a waste of time, but I just realized I don't need to know that shit to trade. It's just what I found out over the years. I don't need to know all that stuff. Okay, but hey, if it makes you feel smarter to know it all, and I studied all of that, and I know how to read them, but I just don't do it anymore. That's an easy way. Opposite candle before the impulse move. Yeah. It's not even the opposite candle, guys. You see a strong move, you look at the origin of it. Obviously, it originated somewhere. That's where you focus on. The origin of these huge, strong moves. Because obviously, they did something at the origin to make that strong move happen. Have you met any BFI CEO or any directives? Well, what do you mean BFI CEO? As in CEO of Deutsche, Citi, JP? No. Do the BFI see our orders? Absolutely. That's a funny one. No, your orders are secretly hidden. Nobody can see them. Even your broker hides them. Everybody, your orders, man, they sell your orders. They sell this information. They sell this retail. If everybody's buying the euro, all these retail kids are buying the euro. They sell it. Just like Robinhood, the app, they sell their flow. They're just selling their flow. Everybody sells their order flow. What session do you trade? Well, whenever I feel like it these days, but usually London, New York overlap. Or pretty much like as London is closing, that's where I like to be. You know, the later half of the London session. But it doesn't matter which session, man. Any trader can make money in any session. Okay, so don't think the session is the make or break. It's not the session, trust me. A lot of people think, well, if I trade this session, then I'll be profitable. If I switch my desk this way, or if I maybe change it to black candles, or maybe if it's not that, it's in your head. All right, fix that first. Stop blaming the market. What else you got? Wish I found you earlier. Not a lot of traders with so much info over their IG. Go through most of it, man. Go through most of it. Just a few of my posts, man, are more than all these garbage courses they're selling. What is the difference between supply and demand and liquidity? Well, supply and demand is where the liquidity is. So there is a difference, but you just got to understand that at supply, there is high liquidity of sell orders, if they're there. And at demand, there's a bunch of buy orders or a bunch of buy liquidity. Keep it simple, man. Well, it's not that simple, Mr. Syed Trades. But yeah, something like that. There are a lot of good trading courses. You don't need to say they're all shit. You also learned from them. They're all shit. Okay? And what did I learn from them? I learned what not to do. You're getting a special block, Mr. Syed. I'm going to wrap up your block in a nice bow. Tim Grover is the man. Yeah, you watched that Money Masters documentary? That's good. Learn the facts. Learn the reality of it. Everybody's profitable on Instagram. Everybody's rich and famous on Instagram. Everybody has an amazing life on Instagram. All right, I think that's it. We stopped going live a while back. Look for their breakout from a consolidation period. Well, you guys definitely got to watch out for this consolidation. This is not it's choppy, mate. Go find another chart. No, this is not the case. They stack orders in consolidation. What's the best time to pile up a bunch of orders? Isn't it when price is real tight, within a tight range? Do you want to pile, if you're a bank, do you want to pile up all your orders when price is moving crazy up and down? Or do you want to pile it up when it's moving in a tight range, in some consolidation? That's when they're stacking the largest volume. So, best thing I can tell you is be very careful with consolidations. There's a lot of action going on in them. All right, especially before they break out of the consolidation. As you know, anybody who trades the consolidation, they all get wiped, and then price continues. All right, so the trick is don't trade the consolidation. You want to be there when it's time to leave it. Shout out to your post. Thanks, buddy. I'm going to go way, way deeper into this. If you think my posts are helpful, like I said, I'm trying to package it all up in a nice format, so you guys can all just absorb it and kind of see things how I see it, because that's the whole point. I want you to take this, and by the time you're done, you just kind of see things how I see it, which is how do I see it? I just see it like a banker. It's collapsing. Price is dropping strongly. It's getting cheaper. You guys are quick to sell. I'm looking for a buy because it's getting real cheap. Or things just explodes up and it starts rallying. It's getting more expensive to me. I just think like a banker. And I'm getting ready to unload these sells after a rally. You know, well, obviously you guys are all buying it up. But you got to sell a bunch, you need a bunch of buyers. And you got to buy a bunch, you need a bunch of sellers to sell it to. Usually retail are on the other side of all this. But, you know, they need a little rally to bring all you kids in. You guys are all buying. This is why you guys love that 15, 20 pip target stuff, because that's all you can get. You know, usually you get that it goes up 20 pips and then it reverses. That's why all these 20 pip kids, that's all they can get. Scared of retracements, scared of letting it ride, pretty much scared of anything. They get their 20 and they run off. If you leave at 20, it'll never get to 200 or 2,000. But making 200 pips, 2,000 pips, you guys probably don't even think that's possible. But hopefully that'll change. Right, you'll see how this game moves, and hopefully I'll make it clear, because that's the point. And then I'll leave this Instagram for you kids. You guys can have it. All right. 20 pips and dip. Yeah, 20 pips and dip. That's it. You keep doing that, you're going to have that 20 pip and dip habit. And you'll never get a 30, 40, 50, 100 and dip. You're going to stick to that 20 pip and dip. Syed, I'm coming for you, buddy. You got to change your name. Syed Trades, just add a word. Syed Trades unprofitably. And then you'll be set. Hopefully you get verified, you get that check mark. Crazy how the best information is not so popular on social. Only toxic shit. Well said. Very well said. You guys think that if you have 100,000 followers, then obviously they know what they're doing. And if they have less, then they don't know it. That's how silly you guys are. Most of you, right? A lot of you guys are slick, smart, and you guys know what's up. Let me answer that one. What was his question? So, is retail a small percent of the order flow? How do the bigger players get enough capital to fill their orders? Well, who said that they only buy and sell with retail? Nobody said that. These banks usually, they buy and sell with other banks. That's why they're in the IB market or the interbank market. Usually it's other banks and financial institutions buying and selling. But the traders, the retail is there. Even though they're about 3% of the volume, they're still there, ready to get wiped out, ready to buy after a rally. It's the worst time to buy is after price goes up. And the worst time to sell is after price shoots down. It's actually the time to buy is when it drops. And it's actually the time to sell when it rallies. Okay, but you guys, you gotta wait for it to rally. Higher high, higher lows. Make sure the uptrend is there. Make sure you did a super duper confirmation, and then you buy after the uptrend is over. Hopefully, you know, there's a million mistakes that the retail does, but we ain't getting into that here. All right, but I answered that question. They trade with other banks, man. It's just retail is part of it, a very small part, right? But they do contribute. Obviously, if a huge bank is selling and most of retail are buying, obviously they contribute. But they contribute very little. They're so insignificant. It's not even funny how insignificant retail is. The edges of consolidation are the best times to buy or sell. If it's consolidating, yes. What's your favorite time frame? Weekly. All right, guys. Go back to what you were doing. Yeah, nothing can hold you back. Keep at it, man. Keep at it is all I got, but you guys can all go back to what you were doing, and maybe we answer some questions for you. You don't believe weekly range, daily highs and lows, isn't? I mean, is it predetermined, the daily highs and lows? I think it is, but who the hell cares? Okay, it is predetermined. What are you gonna do? Okay, it's not predetermined. What are you gonna do? You guys are asking bullshit questions that really aren't gonna change how you sleep at night. So it won't matter. Are you a day trader or swing trader? Both. All right, that's all I got. Keep at it. If you're crazy enough to trade and be a trader, keep at it. All right? You trade silver? No, I don't trade it. I buy it as a hedge against this worthless paper you guys are chasing. I buy it as a hedge against inflation. But hopefully you understood that. All right, guys. Take it easy.